welcome back to Currency Queen. I wanted to go over, I did some trades this week and had a pretty decent week. For gold, it was a pretty good week for me. I can't complain. But I wanted to see if we could go over a few setups that I saw in the market and kind of just get a glimpse of the explanation that in the walkthrough mentally that I go through when I'm marking up my charts and analyzing whether I'll get into a trade or not. So I'm here on gold right now, if you can see my chart, and on the 4 hour, since we're intraday and scalpers, on the 4 hour, as you can see, it's a downtrend here. I kind of started the replay with a this is the 16th, and actually this is a little bit further back than what I traded this week, and I'll upload another video with the trades for this week. But I wanted to show y'all something. It was pretty significant that if you're going to trade gold or any foreign currency pairs, these are some kind of key things to look at in the market. Right now I have my 50 EMA on the chart, and as you know, I use either the 50 EMA or the 200 EMA, depending on the time frame that I analyze. If you can see, when you all are back testing, it's very good to just play around with your moving averages if that's what you use. And this is a 200 EMA on the chart, and it's still showing a downtrend on the 4 hour time frame. So what I wanted to do is press play. Let's see if I can go a little slower here for a walkthrough. And I'll put the 50 EMA, since that's kind of what I tested it on, back on the screen. And let's get it. Okay, so as we're looking at the chart and the market is flowing on the 4 hour, let's move ahead a little bit, and just to explain the candlesticks, what I watch for is on my EMAs I use as support and resistance pretty much to determine what the trend is. So if the trend is below the EMA, it is a downtrend. If the trend is above the EMA, it is an uptrend. So with those basics known, we're looking at the chart, we're looking at the downtrend, and we're looking to see if this area here is going to be broken or if it's going to continue down. I like to catch reversals because, I mean, that's prime rib right there. If you catch reversals, you have a more likelihood of getting more pips than you typically would, because you're getting in on the beginning of the trend. On the beginning of the reversal. Sorry, y'all. Just got off from work, so I'm a little tired, but not too tired for Forex. When you are watching the market, and let's move ahead a little bit, it's still trending downward. And then, as you can see, right here on the 4 hour, the price went a little higher, kind of went up into the moving average. And let's see if it'll actually, what we look for is a close of the candlestick with the body closing above the moving average to actually, you know, kind of get a full set of eyes on it. And let's see. So what it does is it closes, it's wicking out at those levels because it's trying to move above that moving average. But I wanted to show y'all something significantly, because we typically look at the higher time frame, which is the 4 hour for me, but we trade on the, we enter and you know, execute the trade on the lower time frame, which is around 15 minutes or 5 minutes for me. It just depends on what's going on the lower time frames. But your higher time frame is solid. So I'm going to pause it right here. You see how it broke and closed above the moving average, signifying possible trend change. But because we have these points of interest here, we still don't know, because it could still be a downtrend. It could just be filling in some gaps or retracing. So let's mark this candlestick. I wanted to show y'all the difference on the high. So we're on the 4-hour right now, and if I mark this candlestick, let's go up a little bit more, have a couple more bars print so I can show y'all what the move looks like on the lower time frame. So I'm going to enclose this huge move here on the 4-hour. We're looking at entering just because it broke for a possible buy. These are the lower time frames. This is the 1 hour and this is the 15. So all of these moves, every candlestick on the 15-minute chart, every candlestick is a 15-minute time frame, as opposed to your higher time frame, which is a 4-hour. Look how small that is compared to the 15-minute chart. So this one move here accounts for all of this on the 15-minute chart. So if we know that we have broken above the moving average on a higher time frame and we're looking for buys essentially and demand zones, we're going to drop down to the 15-minute chart and just see what it's doing. So let's see what it's doing. And remember, you're looking for a demand zone. And we have a demand zone with gaps in several areas, as well as liquidity. So let's take a look and see what it continues to do, y'all. Okay, did you see it go pick up the liquidity that was right here? It picked up that liquidity. If you can, rewind the video and you'll see that it picks that up, and let's see what it continues to do. Demand zones are here. And I'll change that color just so you're aware it's a demand zone. And then you have a demand zone here as well. These are 15-minute demand zones. But if you want to go lower and get in and out of your trades faster, you can do that too. I just want to show y'all how the market moves. So it tapped into that demand zone here, and you see how it rejected here. So what you would do is bow. Put this here, and I'm thinking it'll go and pick up the liquidity, and you could put your stop loss. So say you got in here after you saw the rejection, and then you can put your stop loss beneath the candlesticks, a little bit beneath that. So that's a 1 in almost 4, y'all. So let's see if it plays out. Bam. It hits your take profit. So you've already profited almost 10 pips. So 1 in 4. You want a clean 10, you can move it up. But what it did is grab that liquidity, and let's see if it keeps going. As you can see on the lower time frame, that 50 EMA, let's see if it's being respected or not. So after you see that your take profit is had, and then it drops below, your take profit is set as well as your stop loss. So make sure y'all are doing your risk management. But that would have been a pretty decent trade for someone. It's almost a 1 in 4. So stop loss is only 2 pips, and your target is 10. So depending on how deep in the game you are, or the size of your account and your leverage, that was a potentially good trade. Let's look at how it looks on the higher time frame. Taking this off. So what it did was, from this area, you can see that it tapped in. This is a long bar. And looking at it on the 1 hour, you can see the rejection wicks, the bullish huge volume bar there, and then it went in and tapped into our take profit here on the 1 hour. So I do confluence on all time frames. I just make sure, you know, I understand what's going on and I know what I'm getting in. It looks like there is going to be a change of a reversal of the trend here. And then let's just see on the 4 hour how it ends up playing out, if it's going to respect it. So that's how we ended, because the 4 hour, remember, we don't have as many candlesticks when we're on the 4 hour, so we kind of just go with what we see here. But looking at the trend at the beginning of next week, let's see what we get for gold. Even as those candlesticks played out throughout the week, it went down and it still respected the demand zone that's here. So, as not to confuse y'all, because we did have a trade here in this area on the 15-minute, remember? It's back here. But we have a lot of zones drawn up. But however, depending on what time frame you trade on, let's take this off and take this off. And this is the hour time frame. And let's look at what you could potentially get. Let's take this off from the play out here. And these are liquidity swings. So your swing highs and swing lows, there's liquidity sitting in those areas. So sometimes if it blasts, or if you get a wick that passes the zone and you're like, oh my God, it's going to break through the zone, or break through resistance, or break through support, sometimes it's just grabbing liquidity, or it's filling gaps. Because the market likes to have a balance, it stays balanced. So it's going to close those areas where there's imbalance, or pull from those areas where there's liquidity. So if you were to trade on the 1 hour, let's see what you would have gotten on the 1 hour. And mind you, this is an incomplete trend right now, because this is where the market ended on Friday. So if you have a long position and you were using this demand zone here, take that long position. I probably would have got in somewhere around there. Put my stop loss below, a little bit below this area here, and just took my take profit up here. Since this is the high. Of the last candlestick. And I mean, you're risking 5 pips and you're getting 15. I say that's almost a good RR. It's almost a 3. And if you just want to take it up here to this liquidity area to see if it'll grab it, if you're feeling lucky, that's a potential trade setup for you coming into next week. But we don't know if, even if it's a supply zone up here, you can, you know, ride the counter trend of it, since it's showing that it could be potentially going up. You can counter trend trade it, but you have to be careful and know what you're doing. So demand zone here looks like it has a level of resistance, because it's touched these areas quite a bit. Is it 3 times? So just be careful trading this. But there is, if you know what you're doing, a trade setup here. There's a level of resistance. So on the lower time frame, it could be retracing back down. However, it could also bounce off of this. It could be a retest off of the moving average to continue up. So just know what you're doing. Myself, it's kind of late to get into this right now. If you're in this, kudos. But just be mindful that there could be a supply area here where it could be getting ready to tap in. And there's a supply area here that it could be getting ready to tap in. But since that area is already filled, I'd kind of just pay attention to the liquidity above and just be ready to go in either direction. Remember, it's good to have somewhat of a bias, but don't be stuck on it. Always be flexible and move with how the market moves. So that's all I've got for you for today. It's more of an advanced or more complex trade for those that have not been trading long, but I will do more setups and analysis as we go along, and I'll also upload a video of the trades that I took this week, and we can talk some more. Leave a comment below what you took and how your week ended this week, and if you have not subscribed to my channel, make sure you subscribe, turn the notification bell on, and thank y'all for tuning in.